Well, hello for another Switzer update. And today I'm in earthquake repair in Christchurch after spending a night on a ponant boat at Littleton. Just right now, a tram is going by, which is making this a little bit harder to do. Today, of course, was the RBA Governor, Philip Lowe. He faces two parliamentary committees this week, and they're really going to be grilling him. And it comes at a time when a lot of Australians, a lot of economists in particular, are worried about the mortgage cliff. Then hundreds of thousands of homeowners with fixed rate mortgages face something like a 16,500 repayment cliff this year when they go from fixed to variable home loans. Now, KPMG's Australian chief economist, Brendan Ryn, says that with the average mortgage now at $600,000 a person with a fixed rate loan, they will face something like a 16,500 after-tax increase in interest repayments over the 12 months that follows. And he reckons that this is really going to hit the economy. A $20 billion hole he's expecting to be the case, particularly if the RBA keeps raising interest rates. Now, the Reserve Bank has taken interest rates, the cash rate, to a 10-year high of 3.35%. And lots of economists think that the Reserve Bank has gone far enough. But of course, the Reserve Bank is scared that they don't get on top of inflation. Inflation will persist and they'll be in trouble for that as well. Interestingly, Westpac economist Justin Smirk said on Monday, inflation could fall faster than is expected. And these guys are expecting it to be something like 3.9% by the end of the year. This is a very good argument for the Reserve Bank to go easy on their interest rate rises. Let's go to Wall Street now. The Dow Jones was up, hang on, I need my glasses for this, up 269 points or 0.8%. NASDAQ was up 1.2%. And it tells me that the market is thinking that the inflation number that the Yanks get tomorrow, which we'll hear about when we wake up tomorrow morning, is going to be better than the 6.2% predicted. If it's bigger than that, I think the market will sell off. If it's less than that, the market will really like it and it will go for a nice big rise. There are analysts out there. Chris Senyuk is one of Wolf Research in America. He thinks that inflation will remain sticky in the US. He reckons there'll be too many interest rate rises. We don't expect rate cuts in the US. Well, that's what Wolf Research is saying. And therefore, he thinks the market could sell off. I disagree. I think in the end, he'll be wrong. I think the bottom line is inflation is falling in the US. A lot of the analysis I've been looking at points to that. And I think the market's believing it, but we could get a surprise number tomorrow night. Tonight in America's time, tomorrow morning for us. And if it is a bad number, stocks will definitely sell off. There's a lot of pressure on everyone, including the Reserve Bank governor, who also has to get this interest rate guessing of his right. If he does overwork the economy by raising interest rates too high, we could end up in a recession and stocks then will fall. So Dr. Phil Lowe, he's got the hands of households. He's got the households in his hands. He's got the stock market in his hands, along with the Federal Reserve. And I just hope that they get it right. And I also hope inflation is heading down. That's my update for today. Talk to you tomorrow. I'll be back in Australia in our normal circumstances, and I won't be doing it in a red telephone box. Just let me show you what it looks like. There it is. And quite a fascinating town is Christchurch. Talk to you tomorrow.